How to trade intraday while staying grounded in a multi-day context. I want to talk about that real quick in today's profiling principles. Hi, I'm Josh. I'm the founder of Trade Profile. We're a skill development firm for active intraday futures traders, and we use the profile as a way to organize auction information to make better decisions. And have a great example to look at today within the auction. So we're looking at NASDAQ futures currently on the window trader platform, and actually just closed a trade long in the NASDAQ towards the 11,040 area, looking up to 11,100. But the key insight here was to understand where you are in a multi-day time frame. It's really, really easy for traders to get caught into what's happening on a short time basis and not know where they are. And as the godfather of auction theory, or well, the one who's actually translated that into where a lot of us can use this, Jim Dalton has said, the best form of risk management is trade location. Okay, so what does that mean exactly? It means that if I pick better spots to be active, the trade will be easier. And I was just talking to some traders on our development desk who had taken a trade and were saying, hey, it just felt really easy. And I was like, yes, it's because you picked a good spot to be active. Okay, so let's talk about real quickly how to stay grounded intraday in what's happening in a larger time frame. Okay, so we're going to look here at a larger time frame just to ground ourselves and know where we are. We're looking at a weekly time frame, 2-hour chart, and specifically want to talk about something called a posture. And this is something that we came into as the auction began, and it's a term I've coined to help define context to the auction. Lots of people will say, hey, you need to do certain things in certain contexts to get more consistent. It's true, but they don't do a good job of saying what does that mean. And we talk about in our profile trading development pathway, we spend a whole section, in fact, module 11, we spend a whole section talking about postures as a way to set context and expectation. So what do we mean by posture? Okay, well, I've got a couple different profiles here I want to point out to you that will kind of help establish the posture. So posture is 3 variables. That's the last traded price, that's the most traded price of the rolling weekly basis, and the most traded price of a monthly basis. Why weekly and monthly? Are these just arbitrary? No, it's because all markets, even, well, the NASDAQ here, which is a derivative product, but it's a derivative of a product that's driven by its derivatives via options. As options flow drives so much of where we're likely to go next, then we can see other participants participating in the composite histogram on the right, that volume profile. And so you can look at fixed time frames on specific moves, but as a general rule of thumb, if you want to stay fairly grounded, just use the last traded price, the most traded price of the last 5 days, and the most traded price of the last 20 days. That'll give you the most traded price of kind of a rolling week, rolling month, and where you are currently. That'll keep you grounded contextually. And there are about 9 orientations that we see between those different variables. I can pick any product up and jump right in and look at where we are relative to those variables and know where we are. So coming into today, where were we? Well, 5 days here, 20 days here, and prices here. Translation, what does that mean? It means that the auction has moved so fast that not only did we leave 5-day value, but we traded all the way down below 20-day value to the point now that price is below a longer term value than a shorter term value. When that happens, when you've moved so far, 2 questions that we always ask with the auction when we see a move is, will value follow price or price follow value? Okay. Now, the nuance of this is that sometimes price has to go back toward value to pull value lower. And this was part of our plan this morning, was looking around what are potential nodes on this composite that if we spent some more time at could build out enough volume here that we could shift and accept these lower prices. And we had identified 11,100 as a price, and there's also a developing node at 11,040 as well that we're also going to take a look at. Okay, so knowing where that is and knowing how thin this profile is, anytime that if you're selling down here, if you want to lose money, sell down here when all of your value references are above you. So we had daily, weekly, monthly, all of those value references are above us. It's a great way to lose money. So then when we start looking at it on a daily time frame, okay, let's drill down here and look at just a composite profile. And this is just a TPO chart and then the volume profile for the current day. Okay, here's Friday. So here's Friday's profile, and then here is the current daily profile. Now notice that as it got down to the lows, how the volume tapered, and we are now coming back toward the middle around that 11,000. We've still got that 11,040, and here's that 11,100. Still, the larger nodes are the magnets higher. Now, over lunch, it appeared like we were just going to trend lower. So if I explode this out and look at each 30-minute period, you'll notice that we were trending lower as this was getting thinner. And if you're just following you're like, oh, well, we're just going to keep going lower. We're just going to keep going lower. And then the spike. Well, what drives the spike? Now, there was a news catalyst that was part of that, but how to be in a better position around news catalyst is to know where you are contextually so that you don't get caught out. This ran a significant number of points in a very, very short period of time because we were so far below all of that inventory, right? So, this runs back toward areas where we have developed some inventory and then backing off. I still think likely is going to push in this direction. So knowing where you are can really help you. And in fact, gave us the opportunity to be long in this. So when we got and looked down here at a intraday, even smaller time frame, and so this is another way of looking at that TPO chart. Here's the TPO chart. Here's the current full ETH volume profile. Here's that spike that took us back inside of the initial balance low. We were able to lean onto this spike, and if we saw opportunities to rotate back down, that gave us a chance to be long towards target one, which is 11,040 from around 85. So really nice link there out of that trade. And now, looking to see, we were in position to squeeze even higher if we were given that opportunity. But all of this was drilled down from an awareness of where we were on a multi-time frame basis. You want to really up your game and understanding where you are. You'll always be grounded in knowing that. And the easiest way, we think, to be able to do that is to understand the auction posture and have that present and available to you when you're looking to be active in the markets. So hope that helps. Would love to know if you've thought about auction postures or context within your trade. This is something that we talk a lot about on our team, and can really, really set you up for success to be in position for those larger pushes by making sure that you have the best form of risk management, which is good trade location. All right. Peace.